right. Well, good afternoon, Amber. It's good to see you and glad we're here to visit today.
I know, me too. Thanks for having me.
Absolutely. We were just talking about, there's been a lot going on that's like, the business industry keeps changing really fast, but then it doesn't necessarily feel like it's changing as fast as it is, but it's changing really fast.
Yes, for sure.
Yes, and we've been, kind of moving through the market, just trying to stay on top of it, see what's going on. And, I'll just kind of talk a little bit about some things that are going on with investors that we're seeing, some rentals. And, Amber, we've got some really awesome information on what's going on the lending side, including what's going on with jumbo loans. So excited to talk a little more about it and hear what you've got to say.
Yes.
So it's been interesting. Our buyers have kind of evolved a little bit. Last year we had just tons and tons of owner occupied buyers. And lately we're actually seeing an uptick in investor purchases. And a lot of that is due to investors are looking to see where money is growing, and a lot of commercial, traditional commercial investors are not liking all the numbers that they're seeing. So they're going and moving into residential. So that's one of the big reasons why we're seeing so many buy and hold investors coming into the market. And then you also look at, they want to have that supply and demand balance where there's low supply, high demand, they can make more money. And that's the environment that we're in. I mean, even if you just look at like the Maricopa County US Census numbers, where our population increased almost 16% in the last 10 years, but the housing stock increased by 8.3%. So right there, investors are like, beautiful. They could go make a big pile of money from that. And our jobs, this is super cool, Amber, our jobs through July, Greater Phoenix has recovered 99% of the jobs lost.
That's amazing.
Awesome. Exactly. So we need about 2,500 more jobs to match our employment rate that we had in February 2020.
Wow.
Awesome. Exactly. And so based on that, we are just that ideal marketplace for the investors. And so I'm expecting to see more. They're just going to keep coming. And then, we do know the appreciation rates on rentals are giant, and rentals actually are more expensive. It's more expensive to rent in 33 out of 50 of the biggest cities in this country because it's just cheaper to have a mortgage. And Phoenix is one of those. I mean, it is officially more expensive to rent than it is to buy a house in Greater Phoenix. And that's kind of a big deal, especially as we're looking at, last week, the Supreme Court actually pulled back the CDC's eviction ban. And so, we're going to wait to see what the fallout looks like on that, because it's going to be we'll see some shifting. I don't know that we'll see a giant wave of evictions, because I think a lot of people have really been paying their rents. And I know Amber and I, we work with a lot of realtors who are also landlords. And, I've been asking around, a lot of the feedback has been most of the people are really making their payments, at least on single family rentals. So I have less of a pulse on apartments. Is that kind of what you're, hearing and feeling from the conversations?
Yep.
Yeah, so it's, we've got a lot going on now. One of the interesting things is the market is shifting. We are normalizing. The scale of our appreciation is slowing. And just to give you an idea, if we look at January 1st through, August, where we are now, we had actually Greater Phoenix has had a 19% appreciation rate just in the first 8 months, which is just crazy, right? But if you look at it, most of those gains really took place in the first part of the year. So if you look at January, so it's from January to May, 15.5%, from January to May, we had a 15.5% appreciation rate. So that's a huge chunk of the first half of the year. And then it started to slow. So if we look at the median sales price from May to August, it appreciated 3.15%. But even if you look from June to August, our appreciation rate dropped down to 1.25%. So that rate is slowing down, which is ultimately a good thing, because we really do need to, keep things manageable for our buyers. I know, Amber, how often do you talk to people when they just get beat out on another offer? It's brutal. Mm-hmm. And these buyers, they can be great, fully qualified, have a bit, even have an opportunity to put a lot of money down, they still are getting beat out. So it's pretty tough. Just to get, kind of scale on some of the over asking prices, I just, kind of a little trivia, because I thought it was kind of interesting, is In Q2, 17 houses sold for $1 million or more over the initial asking price.
Oh my gosh.
In Q1, that number was 8. And then in Q2, 50 houses sold for at least 500,000 over their initial asking price. And in Q1, it was 15. I mean, that's just, I don't know the exact, these had to be kind of really highly listed prices to go up that high, but wow, I mean, that's what we're up against out there. And, it is slowing, but it's got to be, properties have to be priced right to move. And I know we were just talking about that too, where some houses are sitting and some aren't.
Yeah, that's crazy.
No doubt, no doubt. So tell us more about what you're seeing, Amber.
On the interest rate front, it's been good news. Interest rates started to move upwards around that same time that we felt as though the economy was starting to recover, COVID cases were improving. And then, we took a turn and we're seeing COVID cases increase and interest rates are coming down. And so we are back into the high 2s to low 3s for interest rates on a 30-year fix. Absolutely incredible. So as prices are rising, these interest rates staying as low as they are is making a really big difference on the affordability for our buyers. So buying now while interest rates are low is an incredible opportunity because we know that interest rates are going to go up. It's like we have a crystal ball and it's telling us they're going to go up. We just don't know when. So what we're watching for is we're really watching for the inflation reports. We're watching for inflation to kind of even out and not continue to rise. We're watching for the employment numbers to improve. And we're watching for COVID cases to come down. When all of those things start happening, we will likely see the Fed taper their mortgage-backed security purchases, which means that they will slow down how much they're buying and it will cause interest rates to go up. But as soon as the Fed announces they're tapering, more than likely the day after that, interest rates will go up 0.5% to 1% immediately on the news, because that is the estimate of how much the market is being manipulated right now and how much lower interest rates are than where they would be in a current normal market. And so that's why this opportunity right now is so great, because 0.5% to 1% makes a considerable difference on someone's mortgage payment. And so we're keeping an eye on it. As of right now, I don't think it's going to happen in the near term. Chairman Powell just came out last week and there was no really specific time frame, but those are the three things that they're watching. And then we're starting to, just get some more anticipation about prices going up and potentially buyers needing to buy in the higher price points. And in our market, a jumbo loan is considered anything over a loan amount of $548,250. So $548,250 or above in loan amount is a jumbo loan. We can go as low as 10% down on a jumbo loan. And we now have 3 different investors that are offering that. So before COVID, jumbo loans were readily available and doing great. COVID happened. Basically, they almost went away because
I remember that.
Yeah.
And they were just gone.
Yeah, because a lot of self-employment, a lot of uncertainty. Jumbo loans are always tighter, stricter on guidelines and qualifications. And so now they've come back and they're actually better than they were prior to COVID. So we have a variety of different options, but expect probably 10% down, 2 years of tax returns, although there's some options for that. So that's really good news. And then the other thing we're seeing quite a bit of right now is refinances are back. And now it's not just strictly to reduce interest rate, but if you think about anyone who bought in 19 or 20 that didn't put down the full 20%, they have mortgage insurance on the loan. Well, if we're up 20% just this year and appreciation, then anyone with mortgage insurance has the ability now to most likely refinance to drop their interest rate, not a ton, maybe 0.25%, 0.5%, but also remove that mortgage insurance that might have taken another couple of years to come off if they wouldn't do the refinance. And so if you or anyone is in an insurance situation, a mortgage insurance situation, highly recommend they reach out to inquire about a refinance. We're saving our clients a lot of money. And some of them are people that just closed, 8 months ago, and they're like, what, I can already refinance? And we're like, yes, and you can remove your $200 of mortgage insurance and drop your interest rate, 0.3%. So it's really a win-win. Also cash out. We have a lot of people taking advantage of the equity to pull cash out to make improvements to their home, or even like Sarah was saying, pulling money out to buy investment properties because they want to have the appreciation on multiple homes. So lots of opportunity and options when we see this much equity built up. Any questions, please don't hesitate to reach out.
That's awesome. I mean, and you think about, so is $200 pretty typical for MI?
It's going to range a lot based off how much they put down, where their credit scores were. But back then the mortgage insurance rates were a little bit higher. So different for every client, but the savings has been tremendous.
I mean, it sounds like even just getting rid of that, I mean, we're talking like hundreds and hundreds and hundreds of dollars through the course of the year for that, or thousands.
Yeah,
it's not the strongest.
yeah.
But you think about it, like, even if it's a 0.25% improvement,
Yeah,
plus the couple $100, like, that's huge.
yeah,
That makes a lot of sense.
for sure. Yep.
Oh, fun times.
Yes.
Fun times. Well, Amber, as always, thank you for all of your great information and insight and just watching the market. And I think there's so many huge takeaways. And even like you said, with the announcement of tapering could jump the interest rates by that much. Like, wow.
Yeah.
That's a lot.
Yeah. So buy now before that happens. And then you're really kicking yourself because prices are higher and the interest rate is higher.
Yeah. Yeah. I mean, if you waited from last year to this year for the median house, it's $100,000 difference in what they're costing now. I mean, we don't want to wait we don't want to give that up again.
No.
Awesome. Well, thank you, Amber. I look forward to doing this again soon. And I hope you have a great rest of your day.
All right. You too. All right. Bye-bye.
Bye.